What's up, everyone? This is RoyalFlush, Edward's the name, and welcome to my meter management, not financial advice series, where I try to teach you guys ways of the stock market using examples from games such as Ultimate Marvel vs. Capcom 3 and or other life scenarios that you might understand. Again, this is not financial advice. I'm not a financial advisor, and any of the information from this video is not advice to buy, hold, or sell any particular stock or crypto. And don't fall for any of the bots in the spam if there are any. And please keep an open mind and take some good notes. Let's get started here. So, as you might know, this is Ultimate Marvel vs. Capcom 3 right here. A fighting game that I played for quite a few years, and I think many of you did. Still one of the most popular ones to date. So in Ultimate Marvel vs. Capcom 3, it's a very movement-based heavy game. There's a lot of dashing, very offensive heavy, there's assists, and of course your usual fighting game elements. Really long combos. People love this game to death. Many possibilities, many ways to play. As you can see, I have some inputs on screen, and I'm using my main team, Thor, MODOK, and Beautiful Joe, not in that order. And that right there is Hager, Wolverine, and Virgil. And there's a very specific reason why I'm showing you these characters today. I want to discuss the idea of option selects, okay? Now, by definition, an option select is when you use two inputs or buttons at the same time to cover multiple outcomes. And then the game decides your character's actions based on what your opponent does. In this game, there's no proximity guarding or proximity normals for that matter. So unlike in normal Street Fighter games where you're really close and you say press stand medium, you'll get like a different move. In this game, moves are just tied to the buttons that they are assigned to. Crouching, standing, and some characters even have command normals. This is MODOK's forward heavy, MODOK's back heavy, MODOK's down forward heavy, and there are a few others. Okay, so what I want to focus on though is option selects. First, we'll start with option selects using command normals. So on the opposing side here, we have Wolverine, Virgil, and Hager. And what they all have in common is a jumping move with an input of down and heavy. See that? Wolverine's is a dive kick, Hager's is a pipe, and then Virgil's is Helmbreaker. And that's all done with jumping down heavy, okay? And the dangerous thing about all their jumping down heavies is that they are all really big hitboxes and they all lead to combos. But if you input it as down forward heavy instead of down heavy or even down back heavy, whichever direction you want to go, you will actually get an option select. It's built in option select. If I'm close enough, they will actually get grabbed. And if I'm not close enough, they'll get dive kick. Dive kick. See, he got grabbed there. So if you think of it in that sense, it's actually three different options. For Wolverine specifically, it's going to be dive kick, grab, and grab break, depending on the direction you have held and pressed. Okay? See? Grab break, grab attempt, and dive kick. There we go. Okay, so grab, pipe. Same idea, grab or Helmbreaker. And so the dangerous thing, like I mentioned before, is that all three of those characters, they all get combo damage off of their grabs, either through use the assist, an OTG pickup, and or X Factor. Okay? And now here's another option select that this is actually more universal to the game. It's a grab option select, okay? So in this game, there's actually many ways you can backdash in this game. You can see my inputs there, right? You can just tap back twice, or forward twice, or you can tap two buttons, and depending on the direction you're holding, you will get a forward or back dash. And for characters with air dashes, you will also get an A-way directional dash, depending on who they are. All my characters have air dashes. Beautiful Joe only has a forward dash and a back dash. And he could actually dash forward twice if you blink dash. Thor also only has well, he has an 8-way air dash. Okay, so we understand that dashing, forward, back, or even down, or the direction you want to go in the air specifically, if your character has an air dash. And then how I mentioned before, how there are no proximity normals. Well, there's grabs, and you grab by pressing forward or back, and the heavy attack button when you're close enough. So there's several things I want to point out here. With the Plink input system, you can actually input something. You can see my inputs right there. I'm not pressing medium and light at the same time. I'm actually pressing the medium button and then the light button in very quick succession. And so what happens is the input window for the heavy button is overridden by the faster input. And then the same applies to the S button, which is normally not cancelable into anything unless it's on hit. So, for example, launching. You can actually Plink dash using the S button. With Thor specifically, you can use Plink dash like this, with S and dashing. 2-button dash. You see that? So you can go very quickly. And then there's another one. This is the H and L Plink dash. So I'm tapping H into his L button really quickly. But did you see right there I grabbed him? We'll go back to Thor. I'm pressing it the same exact way as I was Plink dashing it. This in itself is an option select. You get a dash, you get a grab break attempt. And other characters can do it too. If they have command normals, Modak has a forward heavy, a back heavy, you still get the option select here. So in a sense for him, it's another option select. You either get his forward heavy if you timed it just slightly off, you get the grab attempt if you're close enough, and you also get the Plink dash if you timed it just right. Beautiful Joe, same thing. He has no command normals on the ground except forward end. So this is a very important part of Marvel because of it being such a movement-heavy game. Many characters, many players would use Plink dashing as a ways to establish neutral, to get around the screen, and well, play the game how they want to. Understand? So you might be wondering, why am I telling you all this? Why am I teaching you option selects for a game that's been out for a long time? The real reason I'm trying to teach you option selects in Marvel 3 is to introduce you to options trading on the stock market. That's the real reason why I have this video set up today. Okay, so let me go ahead and get to the meat and bones of this. But another key point here is that it's the use of a complex mechanic to really expand the landscape and one's perspective of the game, whether the game is Ultimate Marvel vs. Capcom 3 or the stock market, which in itself can be, after a while, it starts to feel like a game, okay? What options trading allows one to do, because from what I understand or from what I've known from people who know what the stock market is, they really only think that you can make money on the way up. When you buy a stock at a specific price, hopefully in the future, whether it be a week or a month or years, you hold a stock and you hope that it goes up in value, then you sell. That's simple investing, and that's cool and all, but that's literally only one side of it. With options trading, you're actually able to play the market sideways. If the market's if the stock is moving sideways, or if the stock itself decides to fall in value, then you can then make money on the way down on a put option. So let's get back to Robinhood, and let me go ahead and take you through what it would look like to initiate an options trade here. So we'll go into Google here. That's one of my main holds. I've been holding this one for a good part of this year. And then so you would go to trade options on Google, and then you will open up what's called an options chain here. This has many settings on here. You can see many tabs, different expiration dates here, and all of these things are really important. And now So let me go ahead and break down real quickly what each option is. When you're buying a call, you're actually hoping that the stock rises in value, and then depending on your strike price, that will determine whether it goes up in value or goes down. So if you buy, say like right here at the 116, we can look at the delta here. For every dollar, it's gonna go up 50. So okay, with options, you're dealing with multiples of 100, and that deals with many of these. Well, with all the Greeks here, the cost to buy, and this is the cost to buy this option right here. Okay, so delta here, for every dollar that this stock moves up or down, it's gonna go down about $50. Gamma, that's another important Greek. This will affect that delta for every dollar movement. So if the share price does go up $1, you add this gamma to the existing delta, and then theta is literally time decay. This is also probably one of the most important Greeks there is. If you hold this thing for more than a day, this is the value. The theta value is the amount it takes away from the total value of your option for every single day, up until expiration. So obviously, the closer you are to expiration, the more theta will eat away at its value. So you have to close the option at a certain point. What else do you need to know? So if you're buying a call, let's go over the basics again. If you're buying a call option, you're giving something value from your starting strike, and then the option's value will either increase or decrease based on the stock's price movement. Okay. If you are buying a put option, you want the stock to go down. Actually, you are doing the same thing as buying a call option, except this time you actually want the stock to fall in value. So in a ways, you're actually betting against the stock. You want it to go down, and then based on when you started, your starting point, your strike, will determine if you gain, if your option gains value. So if you bought this 116 strike on the other side, if it goes down $1, you're going to gain $50. And then for every dollar it continues to go down, this gamma will add to the delta. And same thing applies with theta here. Theta will eat away at this option if you hold it for a day or more. Okay, and right now the stock market is live, so these things are moving in real time. Okay. The reason I don't like to buy options is because time is working against you. And what I mean by that is, if you're not keeping up with the price action of your stock and when you bought it, it could backfire very easily, and you might have to close your option, sell to close your option at a loss. And I think it becomes a vicious cycle of wanting to get revenge on your loss, and so you'll keep on trying, and then you might end up losing more. So even though my account is at a point where I can day trade, I've chosen to still stick to what I'm good at. And I'll really only get back into day trading, buying calls and buying puts when I'm comfortable with my ability to jump in at the given moment. Account is below 25K, you're limited to 3 day trades in a 7-day span, or a 5-day trade period, okay? So if you exceed the third one, then you will actually be locked from day trading unless you get broken out or you agree to not do it, or if you can maintain above 25K. So if you can do all those things, then I will not stop you. I actually encourage you to continue to do it and get better. But if you can't do it, then you have to understand how day trading works, and you can't stay in a trade for too long. You have to understand when to buy to close or sell to close your trade. Day trading doesn't apply only to trading. It also applies to investing. You can write up a stock, however many dollars it goes up, if you have it, and then sell it the same day. That's still a day trade. Now let's go over to the sell sides of things. I actually sell options more often than I buy options because then the deltas, there's a few things that do change up. Theta is then actually on your side. And on top of that, there's a collateral involved. So collateral is you need something instead of buying into something. So for selling calls, you actually need 100 shares. in order to initiate the trade. But you also get paid. I'm gonna make more detailed videos on this one, since selling call options is one of my main strategies. And selling puts, in a way, they revolve around each other. It's called the wheel strategy. But in this case of Google, for example, we'll continue at this 116 strike. You would actually get $95 for writing this contract today, which expires tomorrow. There's two things that happen with a option. It's either when you're selling options, particularly, or selling puts. You either let them expire worthless, so they are actually out of the money. So in this case, if this share price is below this given 116 strike, then you actually get to keep your 100 shares, and you actually get to keep the premium. If you're selling a put, you're actually trying to pick up shares. You're actually you get paid for doing the action, but you can also pick up the shares. So say I had literally $11,600. Let's just say I had that lying around and I'm ready to pick up Google at that price. Then I would do the 116 sell put. That would be at the money at the moment, but it would if it's say at this very moment it expired on Friday at this very price, I would not get the shares, but I would get the premium for writing up the option contract. Okay, so as you can see, there's a lot going on with options here. And so that's why you would want to know the significance of your strike, the date that it expires, and whether the option's in the money or out of the money. Okay. There's another thing called exercise. So let's say on the flip side, if the Google share price dips below my strike price of 116, I am obligated to buy the 100 shares at my strike, because if it fell below, well, then that means it's in the money. And so that means you would have to exchange the value of, well, the strike. 100 shares of at 116 or 11,600. Okay, you understand that? You would get those, and then now you own 100 shares of Google at that price as your cost basis. Actually, primarily have several sell calls. I have one right here on I have two on AMC right here, another two on AMC right here, and then one on Google, because those are the only stocks I own. I own 400 AMC, and I own 100 shares of Google. So I'm able to write up to 4 covered call contracts on AMC, with each of those 100 shares per contract acting as collateral, and I own 100 shares of Google. So I can collect premium using my 100 shares of Google as collateral. The two up here, these are called cash secured puts. That's selling puts. Lucid right here. So Lucid, I have a $17 put on Lucid, and its current price is $16.92. It is barely in the money, but if by Friday at closing it is above $17, then the option will actually expire worthless, and I would be able to completely collect the $73 I collected in premium. And then let's go ahead and look at my Palantir one. This one I kind of jumped the gun on this one. I have a $9.50 put on this one. And let's look at Palantir's current Palantir's current price. There's a very high likelihood that I will be assigned these shares. $33. So I kind of really jumped the gun on this one. You can set your expiration as far out or as close out as you want, but I typically have best luck with the same week expiration, and maybe on a Wednesday. You would want to look at the charts to see how well or how close you are to being in the money or out of the money. Okay, so always make sure you do your basic charting before you jump into this. This one, I'm willing to accept this one because I just like having a couple stocks to perform the wheel on. Palantir and Lucid are both stocks I used to own at a much higher price, but I've since sold them, but I'm ready to get back into them. So say you want to cancel that, I will make another video on this action. It's called buy to close or sell to close. So depending on the action that you do, so since all of these are sell options, I could actually buy all of these back at the current value to close them. Well, except for the Iron Condor. We'll save that one for another video. So for these AMC ones, I could literally buy these two back for $30 altogether, and it'll close that collateral, that option contract entirely. I can buy this one right here for the $13, so 26 total to close this option. I can close this at $28. So you would want to buy to close or sell to close to close out the deal. Say you are already here. We'll go look at the AMC one specifically. This one is about a few weeks out. I have already collected $22 times 2, so I've already collected $44 in total, or 31%. So that's pretty decent, but I want to keep this one. Maybe let it expire out of the money and worthless, and that way I can keep my shares. If AMC continues to climb up, then perfect. I made extra money, and I've got to see stock appreciation. So that's selling options. Honestly, I feel like there's more at your command, and there's a lot less stressful. You don't have to monitor during the day. This is a new one I wrote up today on Meta. That's Facebook. We'll go to trade options on Meta, and this will actually replicate my exact trade. I have it on a September 9th expiration. The sell options go on the inside, and then the buy options go on the outside. So this is a four-legged strategy. So first I'll sell the 180, and then I will buy the 185. That's a $5 difference between the two, and you can see on the profit loss chart there, I could lose up to 437 but gain 63. So that seems like a pretty nice likelihood. And then on the flip side, you switch to puts. And then now the lower legs of my current option are buy the 160 put and sell the 165 put. And so now what that creates is this special figure here, which is the Iron Condor. The green is in the money zone. So as long as Meta's price stays within this green, every day this thing will gain value, and I can close this up at a profit. And if it's in the red by close or anywhere in there, it's out of the money, so it's starting to lose value. And then so how you would close this though is you would continue review order. This has a $500 collateral, so you actually by default you need $500 in your account to write this. But at the same time, if this thing gets picked up, you can get picked up. They would pay you $235 theoretically speaking, and this thing's gonna change in value because market is open. And then so every day it's gonna chip away at the value of the option, which is working in your favor. This is a combination of a put credit spread and a call debit spread, which are both range bound option contracts, option strategies, I would say. Okay, so I usually do these about 2 weeks out. It's easier to monitor that way. Okay, 1 to 2 weeks. 1 to 2 weeks. Because you want it to stay within a specific bound. I will make a more detailed video on that. But case in point, there is a lot to stock options. You have to just figure out which option strategy fits best for you. Personally, I like selling options more because, as I mentioned, I don't need to worry about as much on the way a stock is moving on the charts. I could just look at the prices of the stock, choose my boundaries that I'm willing to let it be favorable to me, whether it's selling option contracts or even making an Iron Condor, and I would know if I'm looking good on a trade or bad on a trade with quick glances. I could do this also while I'm at work, so it makes managing trades way easier for me. By understanding options, though, there's way more ways to play the stock market as opposed to just buying a stock and simply investing. This is the main takeaway. You're able to play the stock whether it's going up or down. And on top of that, you actually don't even need to own the stock. If you're buying option contracts on a stock that you don't own, you actually could just understand how the stock moves, whether it goes up or down or stays at specific ranges based on either your Fibonacci levels or resistance supply demand. You can play a stock without owning it and still make money. So I think that's a great advantage as opposed to having to buy a stock, holding it, and then how long are you going to hold it for? You can actually do that, but it's better to, in my opinion, it's better to understand how options work so you can play many ways. You're not limited to just one action. You can do it however you see fit, at the speed you like, and on the time that works for you. Okay? So hopefully you guys understood that. I will make more detailed videos on the wheel strategy. That's one of my more common strategies that I use, especially on long holds. There's always going to be some upsides and downsides to options, but I would say get comfortable with some stocks, just a small handful of stocks. I'll also make a video on watch lists on stocks that you can just pile together, understand their price action movements, and so that way you can continue to play them, become familiar with them, make them your main stocks. That way you understand when's a good time you can make money off of it, when you want to buy calls on it, buy puts, is it going to go down? Do you want to invest into it long term and start writing covered calls on it? There's so many more options, and you can only do that with options trading. You cannot do that with investing. Investing is literally just buy low, sell high. You sell low and buy high. You don't want to do that. Options trading is what opens up many avenues of the stock market that you probably didn't know before. That's the 100% true takeaway I want you to take from all this. Okay? So, let me know what you guys think. Leave a comments in the description below. You can start your own Robinhood account with my link if you like. If you want to earn it, you're going to have to learn it. And in order to get what we desire, you're going to have to jump to the fire. I'll catch you guys in the next one.